debt, inflation, and deficit spending. At this rate, I'll ask you a question rhetorically, and I'll answer it for you. Do you think that governments will wake up tomorrow and decide, we're spending way too much money, let's just fire a bunch of people, shut all these programs down, and stop spending? What's the odds of that happening? In my opinion, it's basically, I don't want to say zero. Nothing's impossible, but it's very highly improbable at this point. There's probably less than a fraction of a point that happens at this point. At some point, you get to Argentina's level, and what we can see happening there with Milei, he is cutting spending because they're forced to. We've seen in Greece, they go bankrupt, they're forced into some austerity. The United States is a long way from that. So I don't see the deficit spending slowing down. Now, I predict that the government will continue to spend. I predict that the United States will add at least $3 trillion to the federal debt this year. Now, let's just put that into perspective. From the founding of the United States until, I think, the first 195 years, it took to get $1 trillion worth of debt. So 195 years of the country. Now, let's just say that money back then was a lot different than it is today. So it would be even more. But it took 195 years to get to $1 trillion of debt. Then I think it took about 10 years to get the next trillion. I'm predicting that we get at least $3 trillion of debt. Now, if we get a recession or the war breaks out, it's going to get even higher. So I'll get to where those predictions are next. And I guess I sort of already answered that. But I think the government keeps spending. I think deficit spending keeps up. I think $3 trillion of debt is added. And I think that the Fed is going to be lowering rates a little bit more aggressively than most people think. The odds are, I think they're projecting 3 rate cuts. I think we'll probably see at least 6 rate cuts. Right? So they're going to lower rates. The government's going to keep spending, and that is going to push inflation higher. And you might say, "But Mark, I thought they're trying to fight inflation." Well, they are, but if they have to choose between inflation and deflation, meaning asset prices crashing and the whole system falling apart, or you have to deal with more inflation, they're going to choose more inflation every time. So they'll lie about it. They'll change the way they calculate it. They'll change the numbers. As a matter of fact, in 2023, part of the reason why people were off is pretty much every report that the BLS, the Bureau of Labor Statistics, put out, instead of BLS, we should just call it BS, all the data they put out was, benefit of the doubt, it was wrong. It all got revised. So they'd publish it, and then a month later, they'd go, we're going to revise the data. It was wrong. They are either so incompetent they couldn't get the right data out, which is possible, but I think it was intentionally put out wrong to get the headlines, and then they changed it when nobody was paying attention. So they'll change the way the calculation is, which is actually part of the reason why I made that video in January. I said, hey, they've changed the way they've calculated CPI. This will give them the cover they need to pivot. So I predict $3 trillion of debt added. I predict more inflation. I predict at least 6 rate cuts by the Fed. And that will kick up inflation, and that will keep the economy going. Now, what about the economy? Well, I predict that the economy will probably be pretty bumpy. I think we'll see the labor force stay pretty well intact. I think the wages will slow down. The wage growth has been pretty strong through 2003, which is what a lot of people missed. It's why the recession didn't happen. So I think we'll see the economy doing pretty well. As far as the war, it could be my optimism. I am an optimist here. I want it to be, and I'm optimistic. I think the war sort of continues to be these types of skirmishes, and we stay in this perpetual war state. And again, maybe it's just my optimistic and my maybe my naivety. I don't see like this escalating to nuclear war, but I do see it continuing. I do see these skirmishes continuing. I do see this centralization of this globalism continue to break apart, which means that shipping is going to be more expensive. We're going to continue to have skirmishes. We're going to have to continue to reroute again around the Red Sea, reroute around the Panama Canal, probably still dealing with Russia and China situation. And so these wars will continue to push deficit spending higher and will continue to push consumer price inflation higher because of increased costs, things like that, supply chains breaking down and things like that. What else do we predict? Well, let's see. I also think that when we look back to sort of assets and things like that, in the equities. Let's start there. So stocks, equities, things like that. 2023 was a gangbuster year. It did really, really well, which is part of the reason why, well, I don't want to say I told you so, but, part of the reason why I was continuing to stay in it, because I knew the Fed was easing. We saw it. We could see exactly what they were doing. And the problem is when you miss out on these types of moves, it can impact your portfolio sort of for the rest of your life. I mean, I don't have the exact data pulled up in front of me, but if you missed the best 10 days out of like the last 30, 40 years of the market, your returns basically went to zero. And we saw the market move up this year. Almost, last year, 2023, moved up about 26%, the S&P 500 did. And that was a big impulse move. I don't think we're going to see another 26%. I think we'll see mostly volatility and sideways chop in the equity markets overall. The Magnificent Seven, if you will, the tech stocks, they're already starting to falter, and I don't think we'll see that big growth. I think these wars and the supply chains will affect that. But in other parts of the market, I think it's going to do very well. As a matter of fact, in the real estate market, now I say all the time, there's no such thing as the market. There's thousands of markets broken down by size, type, location, etc. So, for example, real estate in Austin, Texas has been very, very weak, but in some parts of Florida, like Tampa, it's held up very, very well. Seattle has been very bad, right? But even within that area, so I do have property outside of Austin, and some parts of Austin have done very, very bad, and some parts of Austin have actually done pretty well. So even within that market, there's differences there. But overall, I think real estate is going to outperform most people's expectations. And part of the reason why I believe that is I expect mortgage rates to drop probably into the fives. I think we'll get mortgage rates back into the fives, and what's going to happen is going to unleash a whole bunch of pent-up demand. As a matter of fact, I just had one of the most recognized names nationally for real estate on my show, and we talked about this exactly. If you'd like to hear that interview where we literally break down why it didn't crash and what he expects, it's all part of this 2024 thing I'm doing. If you want to go watch that interview and see what I think, go to go.onemarkmoss.com/2024. go.onemarkmoss.com/2024. But I think we talked about that there's all this pent-up demand. Nobody was buying. And as soon as rates start dropping, they're going to go buy. So I think housing overall rebounds, not probably large multifamily commercial, but definitely in the residential space. Like I said, equities, probably some lackluster years, but I think there's some sectors of equities that are going to do very well. So, for example, I think home stocks will do very well. I think those are going to rebound very well. Also, I'm very bullish this year on what the commodity sector is going to do. So commodity, that's energy, natural gas, oil. I think those rebound. Uranium, I think, is going to be a big year for uranium. We did very, very well in uranium, took some profits. I think we'll re-enter that. I think gold and silver is probably going to be a big year for gold and silver. And so those are commodities, but we can also play the equities. So we can buy the physical. I can buy physical gold, but then I can buy gold producers and miners, and so I can buy the equity. So in the equities of those commodities, I expect them to do well. So I'll be buying stocks around those: energy, natural gas, oil, uranium, gold, physical things like that. For Bitcoin, I believe Bitcoin continues to escalate this year, continues to climb higher as we're going into this halving cycle. I think Bitcoin will probably go up by at least another 30 to 40% from where it's at today, just for the year. I think it will double probably in the next year and a half. Write that down. Fact check me on that. But of course, like I said, a lot of these commodities, energy, natural gas, uranium, gold, silver, and things like that, I think will do really, really well.